Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to the channel, everybody. Today we'll be looking at moving averages and how you can trade with them. Market go through three phases. These are the only three phases market can go through. So no matter the strategy you are using as a trader, you are either trading the uptrend, you are either trading the downtrend, or you are either trading the sideways trend, the sideways market mode. So today, I'm going to teach you how you're going to use moving averages to identify trends, how you're going to understand moving averages, how moving averages work, and how you're going to use them to identify trends. When you open any charts, either on the M15, H1, H4, daily, weekly, or even 5-minute time frame, you always see the three trends. Either the market is actually going through uptrend, or the market is going through downtrend, or the market is always going through sideways modes. So as a trader, you're either going to be a trend follower or a trend trader or a range trader where you trade the ranges, okay? So most people don't know this. They think the market is very complicated, but the market is not complicated at all. The market is not complex. Though trading is very complex, but the market itself is not complex. So the market can either go through uptrend phase or the downtrend phase. So if you are a trend follower, you're only looking for the time when the market is trending, okay? So you can either trade as a range trader or as a trend follower. But what makes it hard is that before you can identify there is a trend, the market has already left you, because from the beginning you can't identify a trend easily, or you can't identify a range, okay? So that's what makes it a little difficult. It's not easy to identify trends. If the trend is already formed, it's easy for you to identify it, okay? But if the trend is now forming, you are trading live and the trend is now forming, it's very difficult for you to know that this is a trend, whether it's going to reverse or not. So you have no idea. That's why you must develop the skills to spot these trends fast, as early as possible, so that you'll be able to trade and ride on the trend, okay? So when the chart is already there, I will show you some charts. When the chart is already there, you will see that it's easy for you to identify the trends. But in real life, when the market is live, you can't identify the trend. By the time you realize there's a trend, the market has already gone and left you, right? Left you behind, and you know that, okay, this was a trend because I'm getting higher highs and higher lows, so it was a trend. Okay, and when the market is also going through ranges, it will be very difficult for you to identify it's a range, because the ranges will also be perfect as you're supposed to see as on the chart. I'm going to show you on the chart later. It's not going to be as perfect as you see. Okay, but in this particular video, I'm just going to focus on how you're going to use moving averages to identify the trend as early as possible. Okay, so the moving averages are going to help you to identify the trend as early as possible. So without wasting my time, let's see what we can cover. So what is moving average? You normally hear moving average everywhere on the internet, right? So what is it? What is it used for, and why was it programmed? Moving average is an indicator that follows price. So let's assume that if you decide to set moving average to a period of maybe 20, which means the moving average is going to use that period that you set to calculate its movement. So there are different variations of moving averages and different combinations you can combine based on the settings. But before you can do any changes to any of these moving averages, or before you can understand how to trade with them, you must understand how it was programmed and why it was programmed. Okay, so moving averages come in different variations, different settings, different combinations. And as I say, the color does not matter, okay? The color of a moving average does not matter. What matters is the settings and what you're using this for. So as a trader, you can't just blindly be following anything, okay? You must understand why the indicator was programmed, why this particular setting, this particular parameter was added to the indicator. Okay, so that's what you're going to learn today. You're going to learn how to use the moving average to identify trends based on particular settings on the chart. So let's get to the chart and let me show you what you can do.
When you open any charting software, either MT5 or TradingView, you find moving averages on the chart. So here on my chart, you can see I have 20 moving average, I have 50, and I have 200. Guys, it's very difficult to write the amount, okay? I have 20, I have 50, and I have 200. These moving averages are plotted on my chart just to tell me the trend of the market, okay? So most of my strategies are based on trend following. So trend following means you are only looking for trade when the market is trending. So because of that, I plot these moving averages on my chart to tell me the trend of the market. So when I open my chart, I first want to see that the market is trending before I can think of even applying my strategy, okay? So all my most of my trading strategies are based on trend following. So you can see my 200, you can see my 50, and you can see my 20 moving average. Moving averages are too common such that you can find it on any charting platform. And because they are too common and they are too most of the time talk about, people don't see the right use of it. Okay, people misuse it, or people don't know actually how it's supposed to be used and what it's supposed to be used for. So they don't know the exact moment where you have to use moving averages. So they use moving averages wrongly because it's too common. If something is too common, people don't see the right use, right? People misuse it, or people don't know the right motive behind the program of that particular indicator. So when I open my chart, I make sure that the market is trending. If the market is not trending, I don't trade. Okay, I make sure the market is trending. So I will see the moving averages in sequence, either on an uptrend or on a downtrend. Okay, either of them. I want to see the market is trending before I think of even looking for a setup. If the market is trending, you can either use trend line or moving averages or Fibonacci. I'm not fan of trend line because let me show you something. In the normal YouTube videos, right, what do you see? You see them drawing a nice trend line, right? Nice trend line. Sorry, the mouse is curving. Just a nice trend line. Oh, guys. Let's just take it as a trend line. Nice trend line. Thinking that market is always perfect, right? Market is always perfect touching the trend line. Guys, but in the raw market, it's not perfect like that. See this particular moment. Assuming I drew a trend line here. See what happened. Where did the market go? It reversed here. It reversed here. So if you draw a trend line, you get 1 point. Another point and draw a trend line. Why are you going to wait to take the trade? You can't get the trade to take, right? So the same way, on an uptrend, the same way, when the market is retracing back, you see it to be very perfect. But in raw market life, you don't see it to be very perfect like that. It can be like this, it can be like this, it can be like this. Okay, so I'm not fan of trend lines, but moving averages follow the price because that one is already protected for you, so it follows the price. Moreover, you can see that on my chart, having 250 and the 20 moving averages gives me more information than the movie than drawing a trend line, right? Assuming I have just one trend line here. What does it tell me? It doesn't give me much information, but having the 200, the 50, and the 20 on my chart gives me so much information that I can use it to analyze the market better than the trend line. So I'm not fan of trend lines. Trend lines most of the time do not work. Okay, I'm not saying moving averages always work. Moving averages also doesn't work sometimes, but like comparing trend line to moving averages, they do the same job, and I prefer moving averages over trend line. Okay. So how do you trade these moving averages? Put it in your mind that you are trading forex pairs, right? You are trading currency pairs, and as a beginner, I advise that you choose maybe 5 currency pairs. Okay, 5 currency pairs. And if you are somebody who has been trading for some time, I will advise you to choose maybe 10 currency pairs. Okay, for me, with my experience, I trade all the 23 pairs. There are even more, but I trade around these 23 pairs because I'm the one who found the strategy, like who created the strategy. So I'm the one teaching you, which means for you to grab the understanding as I have, you must start small. Okay, you can't just go over all of a sudden and just start trading all the currency pairs. Because before you can learn a strategy from anybody, you must master the strategy. And this is the strategy I have mastered and traded over 5 years. So I can trade it with all the currency pairs. But if you're a beginner, I advise you just choose 5 currency pairs or maybe 10 currency pairs. You focus on them and you trade. Once you become experienced, you can add more. Okay. So when you wake up in the morning, you first have to make sure that there is no red news. Okay. There's no red news. So you go to forexfactory.com. Forexfactory.com to search if there is not going to be any red news per day. That's the first step you must check before you even thinking of even trading. Search for news. If there is red news, you don't trade for that particular moment, okay? Or check the time when the news was going to be the news is going to be released, and if the news is going to be released closer to your entry time, you don't take any trade. Okay, that's the first thing you have to check in the morning. The next thing you have to check in the morning is you check your currency trend meter. I have a video about currency trend meter, so if you don't know what currency trend meter is, go back to my channel and search for currency trend meter and you watch that video and it give you much understanding of the market. Okay, so check your forexfactory.com, check your currency trend meter. Before now, you come and check the charts. Okay, you come and check the charts. So when you wake up in the morning, you have to make sure that you see that the market is trending. Notice the market is trending. If the market is not trending, you don't trade. Okay, so on this particular chart, you can see that these moving averages are dynamic. You can see the market was respecting the 50 moving average. Can you see? Respected. It was bouncing on the 50 moving average. So which means that the market is in a deeper correction. Sometimes the market will just be bouncing off the 20. it will not go near the 50 moving average, but it will bounce off the 20, which means it has a more shallow tracing. Okay, in that scenario, you have to trade with a different strategy. But with this particular strategy, when the moving averages are being touched, which means the market has a deeper correction, so you trade the strategy based on this 50 moving average. But is it easy to identify the trend as early as possible? It's not really easy. Okay, so let's assume we came in the market was here, somewhere here. We have not seen all this part. Okay, forget about this side. Let's see, we saw the market here. What are we looking for? You're looking for a lower low to be broken. Okay, so let's see, let's define a lower trend, a downtrend. A downtrend means what? Lower low, right? Lower low. So if a low is broken, then it means the trend is continuing down. So let's say we came and the market was here. Let's say we have so let's say we just saw this. We are looking for just something like this. That's all. This pattern. We're looking for this Z pattern. And let's see that our moving averages are in sequence. So we're looking for just this Z pattern. That's all we're looking for. Okay. The Z pattern is what we're looking for. Because the low is taken. After the low is taken, it tells you that the market is heading down. Okay, the market is heading down. So what are you waiting for? You're waiting for the market to trace back to one of the moving averages. So assuming the market respected the 20 moving average, then we are targeting the 20 moving average. Assuming the market respected the 50 moving average, then we are targeting the 50 moving average. So now, on this particular chart, right now, what I just did right now here, we can see that the market is, my market is my own market. Okay? My market is touching the 50 moving average, right? So I'm watching. When the market gets to the 20 moving average or the 50 moving average and gives me a confirmation, a bearish engulfing pattern, then I take the trade. So you are looking for the beginning of the trend, lower low, and when the low is broken, you are waiting for the market to trace back a little, and when the market gives you a confirmation, you ride the market down. That's the whole strategy, guys. So we are following the trend, but after the trend has already formed like this, after the candle has already played, it's easy to connect the dots. But in real life, you won't see all this, guys. You won't see all this. And this is what you see on YouTube. Everybody is showing you after the candle has already formed, after the candle has already formed, after the market has already played, and they're trying to give you hindsight bias. And with that, you can never become profitable. So when you go to your own chart, you look for this setup they are talking about, and you can't find it there because it was already played and they show it to you. Okay, so the market will just begin like this way. You see the Z pattern, and then you watch for the market to take out the low. After the low is taken, now you wait for the market to trace back to either of the moving averages and see the one it's going to respect. Then you join the trend and ride the trend down. So this will be the first retracement. But let's say you do not see the first retracement. When you came, the market has already taken the down. So which means the trend is already in motion. Okay, the trend is somewhere here or somewhere here. What are you supposed to do? Now you have to wait for the market to retrace back. So wait for the market to retrace back to any of the moving averages, and then you join the trend. You wait for the market to retrace back to any of the moving averages, and join the trend. Join the trend down. Okay. So here is the first retracement. Here the second retracement, and then join the trend down. I don't prefer trading the third and the fourth retracement because the longer the trend takes, the lesser the strength of the currency pair. Okay. If the trend is taking too long, which means it's losing value, and the trend can reverse most of the time. So I always like to prefer to catch the first retracement and catch the second retracement. And sometimes I can wait for the third retracement if only the confirmation is clear. I don't ride the market down. After that, I'm out of the market. I don't care whatever happens. If the market will go to the moon, I don't care. I don't care whatever happens again because I've taken my first, second, and third retracement. Okay. So you must be patient as a trader. You must be patient to wait for all these things to form. You must be patient to wait for all these things to form. So let's recap quick before you continue. So I said when you wake up, what are you supposed to look for? First, go to currencies, forexfactory.com. Okay. When you wake up, go to forexfactory.com to check if there's going to be any red news. That's the first thing you have to look for. As a forex trader, you must always be on your feet on news. Okay, your feet must always be on the ground on news because whatever trading strategy you are going to use, if there's going to be a news event, it's going to affect your setup. And most people don't know this. Okay, news can affect your setup at any moment. So make sure that before you even think of analyzing the market, go to forexfactory.com and search for news. That's number one. Number two, check if the currency pair you are trading, if the currency is strong. Here we are trading the AUD with the SWIFT. See, this is AUD SWIFT. We are trading it on M15. You can trade it on H1 or H4. Okay, I don't prefer M5 5 minutes because the trends are not reliable. Okay, in the lower time frame, the trends are not reliable, so I don't prefer to trade on M5. But you can test it yourself if you think you want to trade in lower time frame. You can just do the back testing yourself and find out if it works for you. Okay, but for me, I don't like it. I just prefer to trade on M15, H1, and H4. Majority of the time, I just trade M15 and H1. That's all. If I don't find a trade on H1, I come back to M15 to see if I can find a trade. If I can't find a trade, I go to the next chart. That's all simple, guys. So first, look for currency forexfactory.com to check if there's going to be news. Second, check a currency trend meter to see if the currency you're going to trade is strong. You are merging the strongest with the weak. Okay. The third thing you have to search for is what? Search for the market if it is trending. So moving averages are in sequence. And now what do you look for? Look for a point where the market is retracing back after it has taken out the low. So let's say here, this was the first retracement, and this was the second retracement. So you didn't see, right? The market makes a low and took out the low. See? And retrace back. But here you won't be sure, so you can't take the trade. You wait for the market to give you a downward movement again. When you take out this low and retrace back anywhere, see where it retraces. 20 moving average. And gave you a good a bearish and engulfing pattern, and then you take. If it doesn't give you bearish and engulfing pattern, you don't take any trade. So if you take this trade, would it be advisable? I'm asking, would it be advisable to take this trade? This particular place I've marked, would it be advisable? Before you can tell whether it's going to be advisable or not, you must first check where is the moving average. The 50, the 20, which of them is being respected? On this particular chart, you can see that it's not clear, right? Though you can see that it's respecting the 20 moving average. Can you see? But see what happened, which means it's still bypassing the 20 and it's not actually up to the 50. So if you are taking any trade, you have to be very careful here. Okay, you could have still taken this trade, bearish engulfing pattern here, put your stop loss somewhere here, and then you ride the market down. But you were lucky, it could have taken you out. Okay, so if you see that it's touching the 50, wait patiently for the market to come back a little. Okay, so maybe you missed this side. You could have taken it here though, you could have taken it here, but if I was the one trader, I wouldn't have taken it here. I would have waited for it to decrease a little back near the 50 or give me a discount. Okay, discount somewhere here. Then I will just take it so I can put my stop loss a little wider. Okay. So you can see the first retracement, the low was taken, second retracement, but I don't like this retracement. The low was taken again, and you can see the third retracement. And you see you could have entered here, put your stop loss somewhere here. But you were lucky, this one would have taken you out. Okay, this one could have taken you out. But assuming it didn't take you out, you put your stop loss at a good place and take a profit somewhere down here. Okay. The next retracement was this one. This was the next retracement. See, bearish engulfing pattern, right? Bearish engulfing pattern. So after the low is taken, always after a low is taken, when the market retraces back, you are looking for it to sell. Okay. So after the low is taken, you are looking for it to sell. So when it retraces back, you wait for the market to retreat to any of the moving averages to see where it's going to give us a pattern, a very good pattern. Then when the moving averages gives us a good pattern, no, not the moving averages. When the cannot still give us a good pattern, we join the trend and we take the market down. Okay. But this is the fourth retracement. See, the fourth retracement also retraced back to the 20 moving average, gave you a bearish engulfing pattern, right? So assuming you bought here, your stop loss will be here too far. And me, I always tell you I don't like that. Okay, I will always wait for the market to retrace a little. Sometimes, as you can see in other charts I've shown you already, I'll sometimes wait for the market to retrace back, give me a discount because this pattern is too long. See, it's too long. If I'm going to sell here immediately, my stop loss has to be a little far. And if I'm not careful, a candlestick can take me out. Okay, so I always wait for a small retracement before I enter the trend. So even if the market comes back and my stop was a little far, it can take me out. Okay, so that's it for this chart. Let's go to the next slide and let me show you some more examples and how you could have traded this setup. The next example I want to show you here is also AUD-USD chart. And as you can see, we are still on the M15 time frame. So the first question I want to ask you is that, is this market tradable? Is the market trending? It's obviously right, obviously trending, right? Yes. But in real market life, you will not see the market trending like this. You will only catch maybe up to this level. Yes, you catch up to this level. So at this point, will you notice whether the market is trending or not? Yes, at this point, will you know whether the market is trending or not? Can anybody tell me? At this point. Because you have not seen any of these. Assuming you have not seen any of these, okay? At this point, will you notice whether the market is trending or not? For you to know, there are two things you have to check. Check if the moving averages are in sequence. That's number one. Number two, check if the low of a pattern is broken. So check if moving averages are in sequence. Here you can see the moving averages would have been in sequence, moving average, moving average, and moving average. So they would have been in sequence from that point. The next one to check is that check if a low of a pattern is broken. And you can see that this candlestick broke this particular side, which means it has taken out the low. So far the low is taken, which means you are going more lower. Okay, so you wait for the market to retrace back to one of the moving averages, any of them 20 or 50. And as you can see, let me clean this, guys. As you can see, the market did not give you any pattern at the 20, but it gave you a pattern at the 50. So what do? You take your trade there. Simple, guys. Simple. Search for trending market. Search for a broken low, and when the market will trace back to an important support area like in the moving average, and then you buy or you sell. Let me tell you something. Moving averages do not tell you when to buy and when to sell. Put this one in your mind, please. The moving averages alone cannot tell you, hey, it has touched me, so buy or sell. No. We are trading based on our strategy, and our strategy is that when the low of the structure is broken and the market will trace back to an important zone, so we are using the moving averages as important zone, important support zone, so either 20 or 50. So if the market gets back to the 20 moving average and gives us a good pattern, we take the trade. If the market does not give us a good pattern, like here, this scenario, the market did not give us any bearish pattern, so we don't take any trade. But the market gave us bearish pattern on the 50 moving average, so we take the trade there. Okay, we take the trade here. You see that there is a bearish engulfing pattern here. You take a trade here, put your stop loss somewhere here. But me, I wouldn't have taken this trade. You know why? Because assuming you still want to take trade, I'm still taking it. Sometimes I prefer for them, if the structure is too long, okay, if the structure is too long, I prefer for market to retrace a little to at least half of the structure, half of this particular candle. So I would have waited somewhere here. Maybe it would have triggered me though, but I would have waited somewhere here, bought here, and then my stop loss would be a little far. Okay, I don't like being rigged out. Sometimes I can be rigged out. The rig of the candle can take you out. The market will go to your direction, and you say, ah, fuck. Oh, sorry. So the market can just rig you out, and then you start crying. The market will just go to your direction, and then you become very sad. Okay, so always put your stop loss a little far. So this was the first retracement. Okay, first retracement in this whole trend. The second retracement you would have also noticed, right? You just be here and you take your profit, and you're happy. You would have taken your profit somewhere here or somewhere there. It depends on your appetite, your risk appetite. But to take the second retracement, what are you supposed to do? Where is the low? The latest low. Where is it? After this market made a low, this is the latest low, right? Remember, this low is broken, and the market will trace back to any of the zones, either the 20 or the 50. We are taking a trade. So here the market will trace back to the 20, give bearish engulfing pattern. Can you see? Bearish engulfing pattern, and then we take the trade. You can take a trade here, put your stop loss somewhere here, and then you take your profit somewhere here. No, not there. That's too small. Maybe somewhere here. So this candle would have taken your profit out. Okay, would have taken your profit out. Let me show you all. So you enter your trade here, stop loss somewhere here, and then you'll take your profit here. This candle would have come. As at that time, you wouldn't see this. Okay, so this one would have taken you out. These candles, because I've zoomed it out, you see them to be small, but in reality, they are longer. Okay. But aside that, if you are my student, you will follow me for some time. Can you see another pattern here aside the replacement pattern? Can you see something else? Yes, my students, are you here? Can you see something else? Can you see support, breakout? You remember that strategy? The breakout continuation strategy. Can you see? Support, breakout. When the market even retrace, you could have still taken a trade here. So here it was like a multiple confirmation. Okay. Support, breakout. When the market breakout, you get a very engulfing pattern, you take your trade and you write the market down. That's all simple, guys. So trading is very simple if you know what you're looking for, if you know what you're doing, okay. But if you don't know what you're doing, guys, you lose all your money. Okay. So let's go to the next slide. Let me show you more examples. No, you have one slide here. You have one example here. Let me show you before you go. So this is also another setup we have taken. Can you see? So we have first retracement, second retracement, and we have third retracement. So the same pattern, guys. Can you see the same pattern? Trading is so difficult, guys. But if you don't know what you're doing, you lose all your money. But if you know what you're looking for, okay, you gain a lot. But let me tell you something. The success of your setup depends on you, the trader. Assuming this setup is formed, you do not check currency strength meter. do not check forex factors to see whether there's going to be news, and they just enter the market. How would you know whether the market will reverse, whether the news was going to be negative or positive for the market to reverse to the other side? So on this chart, you see it's played nicely, right? Because the chart is already there, we are seeing it, but in real life, you will not see. So for your setup to be successful or for you to get winning trades, you must check some other things. Other factors must come together, okay? Go to forextrader.com. It's free. Just go check whether there's going to be news updates. Check your currency trading meter, whether the currency is strong or weak, and analyze it. And now when you see a setup, you trade your setup. Simple, guys. So search for trending market, and then you see setup in the trending market, and you trade down. You take the market down. Simple, guys. But this doesn't mean every day you're going to have a winning trade. No. All what you're looking for is to get 50% of our trades to be profitable. That's all we want. We want 50%, 55%, 60%, or 70% of our trades to be profitable. That's all what we want, to become profitable traders. So let's assume even you are a bad trader, right? You are very worse. And you get 50 losses and 50 wins. And your risk reward is the most important thing. Anytime you lose $200. Anytime you win $400. Take your phone and do the calculation. Will you become profitable or not? It's obviously yes, right? Become profitable. If your account is bigger, like we do have been trading for some time, and you can risk maybe something like $500 or $400 on a trade, and when you win what? $1,000 or something, $800 or something. Do the math, guys. You definitely become profitable. Okay, so your focus should be to take about 20 trades or 30 trades and make sure that 50% of the trades are profitable. That's all what you need to become profitable traders. You're not going to win every time. There are some examples I'm going to where you're going to be losing to, but most of the time you are focusing on what? Getting good win rate. Okay, if your win rate is even 45% win rate, guys, you can still become profitable if your risk reward is very good. Okay, so let's move on to the next chart. Let me show you some examples next. Okay, so here we are on Euro USD chart, M15 time frame. So let me ask you, is this chart tradable or not? Let's assume we did not see all this side. Okay, you saw only this side. Is this chart tradable or not? When we open our chart, we saw this side, only this side. Is the chart tradable or not? In this scenario, you will not see the moving averages in sequence. You see that the market is even choppy. The moving averages will be jumbled up. Okay, they will be jumbled up like this. When you see moving averages being jumbled up, you don't try to even trade the market. Okay, you don't try to trade the market. So you see what happened next. After that, see what happened. The market was going sideways. So in a sideways market, we trade with a different strategy, not a trend following strategy. Okay, in a sideways market, you trade with a different strategy. So anytime you open a chart, make sure that the market is trending before you even think of analyzing the market. If the moving averages are jumbled up, you don't think of analyzing the chart. Move on to the next chart. Or if you don't find any chart, just go and sleep, go out. Yeah, okay, go out, go and do something, go and have fun or something. But if you find a trending market, now you sit down and wait for a confirmation before you trade the market. But this market is not tradable. See what happened next after that. So you see why I'm not a fan of trend lines. See what happened here. See, assuming you saw one high and another high. You say you want to draw a trend line across, right? So you drew a trend line across and see what happened. The market took you off, right? And you get a losing trade. Here, do you know what happened here? There was news event. News event, guys. But you didn't know. If you don't know anything about this, you wouldn't know this and you get a losing trade. So I'm not a fan of trend lines, and also when you're trading, make sure you check for news event before you trade. Okay. So this is a sideways market. You trade it with only support and resistance. Okay, that one we talk about it in a different video, or I have one video about support and resistance. But now we are focusing on only trading with moving averages, following the trend. Okay, so let me show you another one in the next chart. Now this is USD rate chart, and you can see we are still on an M15 time frame. So you can see my favorite time frame is M15, right? Yeah, because it's not really fast, it's not also really slow. It's in the middle. Okay, select M15 and like each one. Okay, so what do we find at this moment? Look at this moment. Is the market tradable or not? At this moment, the market is not tradable, guys. The market is not tradable. Can you see the moving averages? When you can see the 200, the 20 was down somewhere, the 50 was up. It was jumbled up. At this moment, you couldn't have entered any trade here. So you have to wait for the market to give you a clear trend. Okay, the market, you couldn't have traded this market at this particular moment. But what about at this moment? What about at this moment? At this moment, let's assume you open the chart and you saw the market was here. At this moment, was here. You have not seen all this. Is the market tradable or not? Yes, who can tell me, guys? The market is tradable. See, 200, 50, and 20. They are all in sequence, right? The market is tradable at that particular moment. And what else can you notice? You can notice that the high is taken off by this guy. If the high is taken off, it means the market is heading upwards. Okay, there's a high probability that the market is going to head upwards. So at this moment, the market was tradable. So what are you supposed to use for? What are you supposed to look for at this moment? Look for the market to retrace back to a support zone, either the 20 or the 50. So did we see any confirmation candle at the 20? No. Where did you find a confirmation candle? At the 50, right? But there's no confirmation candle even at the 50. I wouldn't have taken this trade. But if you are an ambush trader who takes trade without confirmation, then you could have taken this trade. But I wouldn't have taken it. I would have told wait and made the trade. I don't care. Okay, if you're a profitable trader, you don't worry about some things. So I would have waited for the high of this candle to be taken out. See, the high, it was almost like equal high. But with this bullish pressure, when the market came back to the 50-minute average, see what happened? The market gave a bullish engulfing pattern. Can you see? Bullish engulfing pattern. So now you can enter your trade. Okay, you can enter your trade. You enter your trade here, and you ride the market up. Guys, very simple. You see, trading is very simple if you're looking for some specific setup. But if you don't know what you're doing, today go and learn super trend from this particular trader. Today go and learn this from this trader. Today go and learn this from this trader. You never become profitable, guys. So stick to one strategy, master it, and become profitable. Okay. So at this moment, you can take a trade from this moment because the moving averages were in sequence.
So guys, as you can see, there is nothing as a bad indicator or a good indicator, right? But the best indicator depends on you, the trader. You, the trader, must understand why you're using the indicator and what you're using it for. Okay, it's like you are going to a carpentry school or you're a carpenter. You have all the tool sets in your box, in your toolbox. Okay, you know what you're supposed to use each of these toolbox for. Each of these tools in the toolbox for. You can't just mix them up. But as a professional carpenter, you have an idea of which tool fits which job. Okay, the same happens to if you're a trader. If you're a trader, you must have all these tools at your fingertips. So you know when to use this, where to use this, and at what time you are supposed to use this. So you cannot just blindly be following indicators or following moving averages if you don't understand them. But what happened to the market? If any beginner comes to the market, they hear moving averages. So they think the moment just market touches moving averages or something you have to buy or sell. No, it's not like that. If you do that, you're going to lose your money, okay? Because you don't understand when you're supposed to use it, where you're supposed to use it, at what particular time, at what particular point should you look at moving average, at what particular point should you look at other indicators, or at what particular point should you trade only price action. People have no idea over all this, and then they just come and they just want to trade with this indicator because they've heard them. The same mistake that we also made, guys. So don't make those mistakes again, okay? So guys, that will be all for this video, and I hope you've learned a lot today. So please go through your chart, okay? Take time, go through your charts, analyze all these moving averages, analyze the market, and when you're supposed to use moving average to trade. So that will be all. Like, share, and subscribe to the channel to just help to grow the channel, okay? So see you next time. Take care. Bye.